Hi everybody, and welcome back to FANG Friday. I'm Ross Healy, the chairman of Strategic Analysis Corporation. Before I get to the meat of FANG Friday, first I want to acknowledge the wonderful win of the NBA championship title by the Raptors. Personally, I think we should call the team the Canada Raptors, as everyone across the country was so joyous in their victory. I think with good reason. The team is so international in its makeup, very much like Canada and Toronto. Indeed, Toronto is not a Canadian city, it's an international city. I believe that it is acknowledged to be the most ethnically diverse city in the world, kind of like the Raptors squad. Yes, they played out of Toronto, but they played for the country, and this is a team that every Canadian can relate to. Anyway, on to the FANG stocks. Let's start off with Amazon, and as I've showed you before, the stock has been sort of bouncing right along its HB3 level. That is 16 times book value. There was just a little break here for a couple of days, but it quickly hustled back on side. And so far, I think we would maintain this as a nice buy hold. By the way, one of the nice things about SVA charts is if you look at the slope of the lines, you can, which by the way is the slope of the growth of the book value, you can tell how fast the company is growing from a fundamental point of view. And the slope of this line, by the way, for the past 5 years for Amazon has been 30% a year. So as long as the stock can actually hold at one of the breakpoint values, you are getting an awful lot of growth on a per annum basis. Second stock I want to review is Facebook. And initially when we started the FANG Friday series, we had a nice breakout here in Facebook, and after holding the requisite number of days, we like about a 3% 5-day rule kind of thing to confirm a breakout. It looked as if we had ourselves a nice buy. Well, unfortunately, regulatory considerations and all the rest of that kind of stuff have redounded on the company. And the MSG price, that's 5.5 times book value, did not hold. And the company suffered a fair setback. However, as in technical analysis, as all too frequently happens, you get a breakdown pullback. And Facebook has pulled back, and in fact, you'll see that the MSG price is 182. Well, today the stock closed at 181. So, in a sense, we're kind of back on side. But we're not on side because the stock actually has to recover over its MSG price. So I remain a little bit concerned about what might happen here. At least no one's offside. But if we do not get a full recovery, then the stock heads lower. So this wants to be carefully watched. As far as Netflix is concerned, we have had a sell avoid on this company, particularly as competition from other streaming services appears to be heating up, including, of course, that from Disney. And the stock continues to drift down towards its HB4 price. That, by the way, is 20 times its book value. Notice, however, that the fair market value is minus 77%. So that's a long way down if anything happens to this company. And as we showed in past FANG Fridays, indeed, the stock from time to time actually does return to its fair market value. So if these lines here do not hold, if these technical support levels don't hold, then not only is there downside risk for Netflix, but it is very considerable. Another stock that we have had sort of a sell avoid on is been Alphabet, and it has continued to drift lower and lower and lower towards its own super growth price, SG price. That's 3.5 times book value. That in SVA terms is a very, very significant breakpoint value, and if the stock gets here, it's virtually inevitable that you're going to get a nice rebound. That's $990 at the present time. It's $10.85, so we've got about $100 to fall, and we might get ourselves a nice buy. So watch this one, because these stocks can move fast. Here is Apple in review, and we had seen this stock break down after the big recovery from the December meltdown. However, it has bounced right back to its bubble price. That's 7.4 times book value, and it also happens to be exactly where its fair market value is as well. That has tended to be a cap on this stock, and at this juncture, I think we would be selling and avoiding being invested in the company. Turning to the last of the FANG stocks, NVIDIA, I had showed you this chart earlier when the stock actually bottomed, and again, remember I was talking about the bubble price just a moment ago. Well, here's the bubble price again for NVIDIA, and you'll notice NVIDIA hit that price exactly. Actually had a 1 breakpoint bounce to its HB1, which is 10 times book, set back again and bounced again. And now, if we look at it where the stock is now, we see that the stock nearly got up to its HB2 level. But when it got to that level, I said to all of you listening that that was probably about it. We were looking for their earnings. We're following the semiconductor industry closely, and the outlook does not look all that good, and so we would avoid this stock at this price. So it didn't quite get to our target, but close enough so that it was time to exit. And since that time, there's been a nice setback in the company. It hasn't quite got back to its bubble price. Remember where I showed you here that it had a nice bounce in December. I am hoping that it might do the same, at least give you a trading opportunity there. But given the long-term view of NVIDIA and the extreme volatility that this stock has had in the past, it would not surprise me in 2 years, for instance, we might look back and say, well, you know, that was a pretty awesome price that NVIDIA had, and look at it now, way down here. Anyway, let's recap. Amazon is a hold and maybe even a buy as long as that breakpoint holds. Facebook broke down, has pulled back. Now we've got to see. Alphabet and Netflix still have not given us any kind of a buy signal. And Apple, after a breakdown pullback, I think is now heading lower. NVIDIA is perhaps the stock to watch for the week because it is heading down to a possible good trading low. Anyway, this has been Ross Healy, Chairman of Strategic Analysis Corporation, reminding you that nothing, including investing, is difficult if you have the right tools. See you next week.